I think you guys can hear me loud and clear, see me as well. All good, brilliant. So we can start. Sorry for the delay. Just a couple of things that I need to confirm in terms of my research as well this morning. So we've got a couple of things to be aware of. So we can actually look at what we can trade as well as the whole market conditions as of today. Now, today is the 14th of May already, and welcome to Bretton Financial Trading Academy's Friday's market wrap-up. So we want to look at what has happened within this 24-hour cycle, the last 24 hours of trading, and also especially in the Asian world in terms of trading. How has it been overall in the financial trading world? And then we want to look at what are the impacts of these risk events that can actually help us understand the trend, the liquidity level, as well as the volatility level of various market conditions or asset classes, especially with stocks as well as Forex, cryptos as well, all in general, financial trading world, in order for us to understand what can we actually do and ride along what kind of trend, especially for the Forex market. Okay, so within the 24-hour cycle, we've got a couple of things, but one of it that strike to be quite important is the risk events that are planned. Now, today, it's going to be quite quiet in terms of data releases, economic data releases, but we are waiting for retail sales from the US. Also, we have some strike protests has been going on in Colombia at this moment of time. The reason why it is going into the headline as well is because it has some correlation with being a country that produces a lot of minerals, a lot of commodities, commodities like copper, gold, and also nickel and all that kind of thing. So Colombia, they are going through protests for their tax reform. So that is going to be impacting copper prices. Cocaine as well, yes, of course, definitely. And I think yeah, it's interesting that you said that, because it's the way the Latin America works is that everything is actually combined into one. So within their clean money and clean things that they do and they possess, like the commodity market, definitely there is dirty money involved in there as well, because it's controlled by the mafias basically there. So it's very mafia oriented, controlled. So there's a very thin line between the division between the government and the mafia. So yes, it's going to be quite crazy. And also because it's within the Latin Americas, it might be impacting our US dollar at the moment. So US dollar has been going crazy, mainly because the stocks in Asia went crazy the past 24 hours upwards, very, very bullish, mainly in Tokyo, Hong Kong, and Shanghai. That's mainly a result of Wall Street, because Wall Street basically reacted to the very, very high CPI, Consumer Price Index on Wednesday, impacted the market bullishly. So it's sort of driven the US into inflation, and also now, flirting with the level of hyperinflation as well. So that's from Wednesday onwards, but then that impacted tech stocks, all the technology stocks, and then it spread for a while with the other sectors as well. So mainly because of inflation concerns, as well as the US indexes, the indices and indexes, they have actually fallen 2 days in a row. So that's really quite bad. And then consequently, it resulted in the Dow Jones to actually fall 475 points, if I'm not mistaken. So we are in the borderline between inflation rising up towards hyperinflation as well. So, but then out of all the stocks that suffered and all that, only American Express and Chevron actually managed to climb up a little bit, recovered, and did reasonably well. So they're surviving, and the others are actually struggling as well still, but then recovering very, very little. So that's on the stocks, indices, overall market kind of thing that has been impacting the financial markets in the Asian trading session, especially for the past 24 hours. And then with that, we are looking at the 10-year US Treasury bond. Now that has a lot to do with what we may expect the US dollar would actually do. So now we are actually in a little bit of a limbo because we've got inflation that might actually rise up the dollar for us and then drop the gold. But then because of the Colombia news and the protests coming up, that has a lot of correlation with copper, and copper is the largest consumer is China. And for construction, for technology production of a lot of things as well. So, and then we've got China's reliant on copper. They buy some from Colombia as well, but then they buy a lot of other minerals from Colombia and Australia. So this might impact China as well in some way. So this could actually impact a little bit of Chinese news coming up next week. So next week, we are going to begin our week with industrial data from China, which would impact Australia directly. So I would suggest, I would think that we will have loads of trading opportunity and also volatility, because as the days go by, we will find next week to be quite heavy as well, reasonably heavy with very high impact data. I think it was especially Thursday, if I'm not mistaken, or Wednesday, but we'll take a look together on the economic calendar for next week. But I'm just laying out what could potentially happen. So with what has actually happened in Colombia, with the copper prices and all that, because there's a lot of politics involved in commodity prices. And now we are talking about oil as well. So oil, gold, everything has got some connection. So because of the protest in Colombia, it has risen the price of copper as well, because the supply of copper, because of all the mines and all that, the protests, all the workers, majority of miners are actually in Colombia. I mean, the workforce is made up of mostly miners of either gold or nickel or copper and all that as well. So a large workforce will actually be halted as well in Colombia. So that might impact shares of certain companies. But in Colombia, they only have one mine. It's reasonably big, but it's owned by Canadians. So Canadians own that mining facility in Colombia. So that would actually impact very well USD Canadian dollar as well in some way or another. It's got a bit of a ripple effect with US dollar. So instead of me having that view of positive the dollar this week because of that Colombia news, and because it's a ripple effect with copper, and then copper will connect to gold, platinum, and then the oil, everything will actually come to the point where it will rise up the commodity. So if commodities go up and then they as a whole goes up, then we can see more weakness in the dollar instead. So when the dollar may have the potential to actually go down a little bit more. So then as of now, I've just looked, that's why I needed a couple of other things, a couple of other minutes to actually do more research on that. So I found that we have got more room to think of gold as of next week as well for the buy position. So it is still in bullish territory. We want to talk a little bit about that. I want to talk a little bit about CHF JPY, Euro JPY, Euro CHF, USD CAD, USD CHF. And we want to also talk about how if for example, the heat map for the early warning basically just went down on me personally, because of my PayPal account at the moment. I think got hacked or something like that. So I've arranged a direct debit with the early warning, and then it didn't go through. So I cannot, they are sorting it out, but I cannot access the early warning heat map. So I want to share how I deal with that scenario. And I must say that I'm not dependent on the early warning heat map either. So how did I actually have got no access of the early warning heat map for 48 hours now, for 2 days, let's say, and I use that a lot, but I use Action Forex as well and the others. So how did I actually deal with that? And that's really important for you guys as well, to learn not to be dependent on any tool, because anything can actually go down at any moment of time. So the most important thing is that number one is you should not be bothered at all if that happens to you. If you've got something that didn't work for the day, or didn't work, or something happened and it needs to be sorted out, don't basically panic. You don't need to panic, because you're not dependent on anything. So if you're not dependent on anything, you shouldn't be bothered by it. So I was not bothered by it at all. But I just want to let you know how I would be actually coming up with trade ideas and still go on with the trading and all that without being impacted at all, not even 0.0001% if something goes conks down, doesn't work anymore as part of your tools for trading. So that is something really important for you guys to understand, that you shouldn't get impacted by anything, especially if there were tools that you are using, regularly using, and get very excited using it, and it's been very good to you. What if it comes down tomorrow or the next hour? You should not be, number one, dependent on it, and you should not get not react to it, respond to it at all, because it should always be, you need to always be in the mindset that these things can happen and you shouldn't be impacted at all. Okay, life goes on, trading goes on, and you still can make as much money or even more without any tools that you are dependent on. So the most important thing is your platform and the knowledge that you actually have right now in terms of analyzing the market with all the tools I've introduced to you, because one could subside the other and you still will get the same results. Okay. All right. So, and the most important thing is you have me and my team of researchers that we basically will scout the market no matter what tools don't work. So that's doesn't really matter for us. Okay. So we have actually seen that some of the news have actually come out now, and we didn't actually see latest news about Colombia in certain sites, and I think Market Watch, Bloomberg just talked about it now, for example. So we do have that about Colombia, but then if we go on to the daily effects, we can see that looking at crude oil prices, and they say it might fall as US retail sales data shapes federal outlook. But this one here was about 4 o'clock in the morning earlier today, but now the Colombia news would actually come up, so that might pull crude oil price up, might actually pull, because all the commodities will work together, in a way, indirectly, like friends, they will pull each other up. If they are going up, they'll pull each other up. So these are the commodity side of it. Usually here, still the price says that shrug off a high US retail sales outcome. So the thing is that the retail sales, yes, it may actually be positive, but there's a lot of political connection with copper, with Colombia, with Latin Americas in general, mainly because the army in Colombia as well is very much dependent on the US, because they're getting backup, standing army and all that from the US as well. So they have to be quite careful. And also Spain, actually. In Europe, it will be Spain that covers the Latin Americas and all that as well, actually. It's a very political game. But then US is highly involved, mainly because of the trading partnership. So they'll be involved in that. And I have a feeling that we are going to expect the fall of the US dollar. So let's get going into understanding a little bit. If I were to go on to the Action Forex, what I've noticed is that on the top 10, we've got a lot of mixed sentiments. We didn't have very clear trend yet on majority of the pair, but volatility still remains quite high in the market. There's still volatility, but I am not sure about the amount of liquidity yet. Hence the reason we don't see clarity in the trend yet. So if you've got volatility and liquidity, a lot of market participants, then you get a clearer trend. So at this moment of time, that is still building up. One of the pair that has got clearest in terms of trend for now, according to the top 10 here table on Action Forex, is the Euro GBP. So Euro GBP is seen to be more on the upside. So we want to explore that. But I have personally looked into CHF JPY. So CHF JPY, based on, is it CHF JPY? Yes, it is. So CHF JPY seem to have some momentum building up, and CHF JPY is correlated positively to Euro JPY and also negatively correlated to Euro CHF, USD CAD, and USD CHF. So here I can see that we have got lots of quite a number of CHF pairs right here. So CHF crosses, NZD only one up there, and also Euro crosses. So as of today, it looks like CHF crosses and Euro crosses are being paid a little bit more attention. But what caught my eye was when I went on to markets section and went into action bias. And on the action bias side of it, it showed me that you've got a straight line right there on bullish on CHF JPY. So that was what motivated me to actually research CHF JPY further. And when I went onto the chart as well and did a trend analysis there, it seems to be picking up quite well. So without the early warning and all that, it doesn't really matter. You can still find other ways of getting bits and pieces of information, put it together so that it still gives you hint of which pair you can actually pick to analyze further, and then to actually look for significant levels and patterns and all that, and then plan for your entry, your exits, and your stop losses. So CHF JPY, as I've mentioned, it's correlated both positively and negatively to the other four pairs that I have actually mentioned earlier on. So still, these other pairs that I've mentioned will be correlated with other pairs as well. So still we are able to get quite a number of pairs, but the most important thing is the market participation. So how do you get your market participation without the early warning or tool, or even other tools that would give you more idea on the market participation in terms of liquidity? The other closest thing that you can actually do is did what I do still, to look into other tools and get the pair. But then once you are on the pair itself, let's say on CHF JPY, then you want to actually apply the ADX. So I'm already into buying the CHF JPY. So what I have actually done is to look at where we can actually buy. So I just, upon experimenting this, I have already bought earlier, but then your ideal price could actually be at 121.10. So this is CHF JPY 121.10 you can buy, and then you can exit at 121.40. Okay, so that's 30 pips there. And once prices go above 121.50 and above, then you can re-enter for the second time at 121.60, and then you can take profit at 121.90, another 30 pips. So you've got about 60 pips in total to make, but two entries. Okay, so the first entry 121.10, take profit 121.40, and then 121.60, second entry, and then take TP to 121.90. That's for CHF JPY. So we can see that it's building up really well. I based this all on weekly, and then I went down to the other time frame as well. It looks quite good. We have got ADX as well above. We've got various other candles on the left as well in various time frame to give us that indication that it may be a possibility to consider higher up prices. That means more buying opportunity for CHF JPY, but I don't want to get overly excited for now. I just want to make sure that I am looking at it in stages as well. So I am looking at the most recent one far back to the left that hinted me on to the bullishness or candle. The bullish mother candle is here, this one here, that basically ended 123.56, and then it started at the opening price of that mother candle at 119.15. So that gave me a hint that no matter what I do, I need to entry only 120 and above anyway. So that's already gone past that. So it is now the current price of let me just change the color there to yellow, just so that we are sure and know that that is the range, that is the area of buy that we are looking at. And let's see. Okay, I'll also change the zone color. The zone should be blue because it's a buy type zone. So this is still for CHF JPY that we're looking at. Give me a second. All right. So it's 119.41 to 123.56. So that size of the candle itself, it's about 400 plus pips, but that's on the weekly chart. As we move along to the daily chart, let's see there. So there you go. So my personal take profit is at 1 to 190, but I might push it down to just take the 1 to 140 as well, and then re-enter later on to do that. So yeah, so that is for CHF JPY. We can see that even on daily chart, you've got the ADX above, quite aggressively moving upwards above the level 25. So that's actually quite good. Good sign. Even on the 4-hour chart, very good sign as well. When we see the RSI as well, as we draw the trend line right here, you can see that it's quite strong to the upside. It has also broken that resistance there. It's on the upside. The blue line for the RSI is actually on the upside. So, and also together with that, ADX is proving to be very strong. It's also from the 1 hour itself. So from the shortest term to the medium and then long term, it's quite steady on the ADX. So the strength is building up. So this strength build up through the ADX itself, and then through the candles that you can actually see, it's a substitute for the Forex early warning, okay, in a way, because it is giving you the same indication that CHF JPY is a pair that you can actually look at, mainly because there's a lot of market participation, reasonable market participation in there. But at this moment of time, you just have to watch out. On the 1 hour, for example, it is approaching an area here of resistance. It's really close to 121.00 area, and then as it goes up 1 to 110 onwards would probably be an ideal buying price for CHF JPY. So still early, not very early, but this is what we can actually notice. You've got an area of resistance right there. But as we go on, let's say on daily chart itself, oops, give me a second. On a big picture, you just want to move on. When you go into the daily chart, you cannot see much on the left. Hence the reason I analyzed using the weekly, because the weekly we can then see all these price action right there. Okay, before that we cannot. So until you can actually see some price action to the left to give you more data, then you actually adjust and look and analyze the market based on that time frame that has the data. So I couldn't actually analyze more and draw all these lines or even look for patterns and all that without being able to see the price action on the left. So when I go on to 1 hour, 4 hour, daily and all that, it was not very clear. It was not enough data for me on the left. That's why I'm stuck here with the weekly chart, because the weekly chart would actually be much better. So when it goes beyond here, as you can see, the price, the candle itself, the nature of the candle, CHF JPY, on the weekly chart itself has got no wick at the top. It's actually moving quite fast, quite good as well. It's moving into this territory, this buy territory here between 119.41 to 123.56. And then to the left, I mean, I've got this mother candle right here. So that's how I measured that bullish area. But if you look at this area right here, that is what's determining these two yellow lines right here of how I've drawn that buy zone. But then on its left, again, you can see that you have got this giant mother candle, bullish mother candle to the left right here. This is a 2015 candle. It happened in 2015, but that length, the length of the mother candle itself, the body of the mother candle on this here, it's about 2000 pips. So we need to respect that, right? But not take the whole 2000. But then it's telling us that we have some movement. If it is driven, if CHF JPY is driven to the upside by a lot of other fundamentals news coming in, it has this potential. But whether or not it really will go for this whole 2000 pips at the end, we don't know that. But we can ride along as they are fuel, then we can go forward. There are no fuel coming from fundamentals, coming from news, then we don't go. It's like that. Okay, so this is basically it for CHF JPY. So CHF JPY is a bit of a potential there. I'm already in it, so you guys can be in it too, but then try to trade safely in terms of layers, 30 pips, 30 pips, 30 pips, and just take it slow. At least you have 30 pips to manage in terms of, profit side of it, but then in terms of losses, you can actually aim at 60 to 70 pips in terms of your stop loss. So you need to take that into consideration so that it can then guide you on how much per pip are you going to trade, what's your lot sizing like, what's your risk appetite like as well. Okay, so this is the outlook for CHF JPY. So a little bit of trade idea, a trade signal there for you guys. So there you go. All right, so that's for CHF JPY. I just want to also show gold very quickly. Now, gold has actually given, as you guys can see, it was not giving a very nice picture in terms of the buy side because we had longer bearish candle coming downwards. But now that body of the bearish candle has actually gone and slim and became really slim. It was fatter before and then became slim. So that means it didn't have enough power, enough food to actually go down much more. So now it is just, we don't know what's going to happen, but it is within the bullish zone that is shaded in blue right here. All right, so that is basically what's going on. So it's in within the blue zone, it's in within the buy. So it is still having some hopes with the inflation scenario, but with Colombia coming in and stuff like that, it might actually push up prices much more to be in within the bullish zone and hopefully hit some more of our TPs that are already planned up here. Okay, that's for gold. So if we look into the GBP USD, for example, or other USD crosses, you can see that it's building up the momentum for the buy side for the other pairs. So that could potentially give us an idea that USD may be weakening. Whether or not it's really doing that, we have to wait and give it more time because London hasn't opened yet. So we just want to be aware that that the dollar can weaken at any moment of time. There's some political forces are at play connecting US with Latin America in general, and because the large protest does actually impact a lot of other trade relations, kind of import-export between US and Colombia as well. We are buying loads of stuff from Colombia. Not only minerals, fruits, producers, food stuff as well are all coming from Colombia on a very big scale to the US as well. And then you've got a very large population of Colombians investing in the US. So we don't know what kind of investment these are, but it's quite significant. So because everything is political as well, and it relates very deeply with commodities, hence the reason there is a big play, but it's not going to be shown very openly, but it's going to be shown and reflected from the price of commodities, I believe will go up, and also gold as well. So let's see, we don't know that for sure, but most likely it will drop and impact the US dollar. So major crosses may be good to trade as well today, because it involves the dollar, but I think it's more on the buy side for the other currencies as opposed to the dollar. So dollar, has got loads of potential to weaken. If not for the Colombia thing that is going on right now, then we will see a big surge of US dollar, and then maybe a big fall of gold. But then as of today, because of this, I think it might change. So but we don't know that. We don't want to make our own news with it, because we are not in control. So it depends on how the big boys are going to play the game. So here, when we go on to action Forex, I've lost, this is it. Okay, got action buys here. Let's just go back to heat maps. Okay, so we've got, as you can see, it's quite colorful, so it's not really very clear trend-wise as well. But when we look at to the euro, it's giving you hints that it's on the strong side. It's strongly bullish against JPY, especially. It's building up quite well. So Euro JPY, as you can see, CHF JPY was correlated to Euro JPY. So again, it's giving you a hint that Euro JPY can be another pair that we can actually look at. Euro JPY, and then we've got CHF, as you can see, is quite bullish against the dollar. So because CHF is a safe haven, that is one of the reasons to also consider the impact from Colombia as well on the commodity side of it, because there's a risk event going on. So there may be more channeling of the wealth and the investments into safe haven like the CHF. So then we can tell that this is basically what happens. JPY as well, but then JPY is governed by different reasons at the moment, perhaps because they have already gone, traders have done a lot of buying already with JPY. So it's time to actually sell at the moment, because all the buy have already taken place because of the crisis, because of the close of 3 cities, because of COVID and all that. So that already happened. The buy on safe haven for JPY already happened. So it cannot happen again right now. Now it's transferred to CHF as the safe haven, and we can see if it is just the dollar itself, you can see it's already gearing into a lot of selling. It's already falling, you see. So there may be a bit of a pattern there, USD going down and gold potentially can go up. We can take a look at Gbp Jpy. Let's take a look at Gbp Jpy very quickly. Gbp Jpy, yes, because of the potential for JPY on the downside, GBP may have more room to the upside. It's trading at 153.79, 153.80 psychological number right now. So you don't want to be entering it at this moment of time, but if you look at the ADX itself, it's got a lot of strength to the upside. It's got a lot of strength of the current bullishness still. So yes, the position would probably be more to the upside. On the shortest term, let's say within 1 hour to 4 hours, you just want to take a look at resistance level here, which is at the 154.20s area. Okay, so I would guess that there may be some buying opportunity for now, but not too much at this moment of time, and I think it might go up to the 154.20 area or so, or maybe 154.00. So you've got another maybe 20-30 pips to make in terms of your buy position at this moment of time for GBP JPY, but not too much yet because it's still early. It's not driven by any fuel from fundamentals or economic calendar, economic data report, or anything in the news at the moment, and the market hasn't opened in London yet. Just gearing towards opening, but not yet. So it's also taking a little bit slow on a Friday as well, so people are taking it slow. So at this moment of time, GBP JPY, don't aim for too big a pips to buy, but the overall scenario sentiment is for the buy, but not yet. Okay, so that is very important for you to know. GBP JPY. Okay, so that's it for GBP JPY. On USD JPY, we'll take a look right now. Okay. So as we've mentioned earlier on, we look at the potential for USD to be weak overall, but again, every pair has its own personality, and because JPY is weak, USD is getting weaker. It is still considered to be slightly stronger than JPY. JPY has been weaker and weaker, already started the downtrend for longer than USD. USD has just begun the downtrend. So it is still considered a little bit stronger than the JPY, as you can see. So if we go on to, let's say, the 1 hour chart itself, you can see it's starting to actually fall against the JPY, right? But then when you look into here, for example, on the 4 hour chart, it's quite clear when you look to the left, that fall can happen and come down until the end of this bullish candle right here. So I would imagine that that fall can come down to 108.98 area. That's your sell position if you're thinking of selling the USD JPY. But it's just that my worry is that it will fall there and then potentially find support again there. So that's about 37 or 38 pips there. But then if you are wanting to sell or already selling the USD JPY now, I would suggest to actually exit a little bit earlier. I would think at 109.10. Okay, so instead of making 30 plus pips, almost 40 pips, you can actually make only about 25 to 28 pips, I would think. So you can sell now, let's say, and then look into exiting at 109.10. Okay, so that is for USD JPY for now. And then I think it might reverse from there on, because if we look at the daily as well, it's got two areas of potential reversal. So as of now, yeah, it's looking like it may reverse. So it could actually reverse anyway between 109.00 psychological number or 108.80 psychological number as well. So I see it able to reverse in these areas. Okay, so that's your area there, because it's still governed and controlled by some bullish candles. So yes, limited fall, but still a little bit stronger than the JPY. Okay. All right, there you go. So that's basically it. We've got some, but we want to trade a little bit, warm us up with USD, with CHF JPY. We'll monitor Euro JPY, but you can trade your USD JPY as well. Here, but again, it's limited. You've got a bit of a sell, but more of a buy potentially. But again, it might even go sideways because we don't have very clear indication of what it wants to do, driven by very powerful buy candles. It's got some one buy candle here, but not as many, especially recent ones. So this is basically it. And Euro CAD. All right, I just want to take a look at Euro JPY. Let's take a look at Euro JPY. Now on the daily chart, it looks really beautiful on the upside. Very nice way of it moving. It's at the 132.42. So I would think that if it were to find a bit of resistance, maybe at 132.50 psychological level. So if I go back, I can see that it may approach this very big giant resistant area. So I want to pay attention to that area as well. So here, so that area of resistance would actually be starting at 13280 psychological level. So no matter what you do buying right now, make sure you exit at before 13280. So let's just, so there is a potential for it to either find resistance and fall at the 13280s area, or get driven by some very big news in the Eurozone as well, because you know, Germany is your when it comes to copper, for example, and because Colombia will stir the pot a little bit and make copper prices in general to actually be impacted, then you want to look at the two major buyers of copper market. Number one is China, number two is actually Germany. So that can actually impact the euro as well, actually. So a lot of people cannot actually really see that because it's behind the curtains, you know, indirectly it's behind the curtain, because copper is used a lot in the high-tech manufacturing, and the highest tech country in the whole of Europe is definitely Germany. So with all the things that they create as well, they use a lot of copper. So they are probably the number one consumer of copper in this side of the planet, in the Europe side of it. So yeah, and hence the reason I think, you know, depends on what goes on in the media. What goes on in the media for all the commodities especially will impact one commodity after another, and it might actually go up. All the commodities might go up. The gold might go up, then copper might go up, oil might go up, palladium goes up. You know, all these ones will start to ripple effect one another to actually pull them back up. And then as it goes up, because of supply, because of risk event, because of the lack of miners going back to work as well. We don't know how long the protest would happen, because sometimes the protest gets a little bit more aggressive, will impact all the other industry as well. And because commodity is actually quite a big one that has its own geopolitical sort of connection as well. So yeah, I see that we may not see too much liquidity, but a lot of volatility. Okay, so volatility when it comes to USD, it is shown that the USD and Canadian dollar could actually be very volatile today. If you combine euro and Canadian dollar as well, can be very volatile. So volatility does not mean that you can see all these big candles going up or going down. You may see a lot of movements, but maybe up and down, you know, not too steady move, because of the liquidity is not there too much. So yes, you can still trade with the volatility, but again, trade it wisely in the volatility, because it could actually go into a sideways type market. So that's why you want to take 20-30 pips per time, just to be safe and not to leave any trades at this moment of time without stop loss level, because this is the market condition that is very driven by politics because of commodities, and it can be very tricky. It can actually be looking like it has a trend, but it's got no liquidity. So it's more volatility driving the market movements and all that. But then again, it will just go into sideways for a while, and then go up a little bit, go into sideways for a while, or come down a little bit and then sideways. So we in trading this kind of market, the best is a couple of pips, 20-30 pips, just to limit yourself. And you need stop losses for that, okay? Because you need to exit early. If not, you will have compounding on your losses instead of compounding on your profit in this kind of market condition, okay? All right, so there you go. GBP is said to be quite volatile against CAD again with JPY. So you can see that the reason why it is also CAD, excuse me, is because CAD is connected to oil, and oil is a commodity that is the biggest, most impactful commodity, and it's driven by a commodity currency like CAD, because Canada is one of the biggest exporters as well as having the most, one of the most oil reserve as well. So there you go. That's basically it. Okay. So hope you guys trade safely, understand where your risks are, and please do have stop loss levels. Okay. At least a little bit, 20, 30, 60 pips, 70 pips, stuff like that. You need that to actually preserve your equity for next week's trading. Okay, so that's really important. So before I end the session, we'll take a look at what to expect next week. Now, I've mentioned earlier that the start of the week will have Chinese data. So it's going to be quite volatile, and probably liquidity will start coming in as well as of Monday, most probably, okay? Because we have the giant buyer of copper, giant buyer of oil, have their industrial production, their retail sales numbers as well. So that will then reel in Australia as well to come into the picture, not only because they are trading partners, because they also have their Royal Bank of Australia meeting minutes starting on Tuesday as well. So you can see that if you connect the dots, we have got some players in the market that will actually impact the market's volatility as well as liquidity. So we can see that May 18th on Tuesday seemed to be very, very heavy with very big, high impact or high volatility type economic data. So it starts off with the Japanese GDP, okay, very big data. And then we've got Australia's as well, meeting minutes. Then we've got a couple of GBP and also Euros GDP. GBP will be more unemployment rate, ILO, and also claimant count, but then Euro again GDP. So this is really very big, very important. Also Japan's GDP. So we've got GDP, we've got things got to do with unemployment, employment, and also got to do with announcements from the banks. And then we will see that we've got impact again on GBP on the CPI of the UK, very big. And then we've got Canada coming in as well with the CPI again. And then we have got FOMC. That's on Wednesday, right? And Thursday, as you can see, more AUD. So I think we've got a lot of commodity currencies to trade next week, because the theme will actually be commodity driven next week. So I would say, I would think and imagine that we will have loads of trading opportunities on commodity currencies, which are Australian dollar pairs, New Zealand dollar pairs, Canadian dollar pairs, even the South African Rand pairs, South African Rand ZAR or USD ZAR, also good to trade when we have market conditions like this, because every commodity politics of each country will start to connect and basically move commodity currencies. And then we will look at, I think, potentially move in gold as well. So the more USD drops, the more gold goes up. The more gold goes up, the more the other ones as well, together with oil and the rest. So, and then commodity currencies could actually be really nice to trade as of next week. Okay, guys, I think that's all I have to share with you guys for today's Friday's market wrap up. Hopefully you guys got something out of it to actually plan further. And for any questions, you guys can always get in touch with me in any way possible. Okay, so with that, I want to thank you for your time. Any questions before I go? Alfred, you have any questions? Okay, brilliant. All right, have a great weekend, guys. Happy pipping for today, and enjoy your weekend restfully. And we'll see you guys happy and ready to actually trade a potentially volatile, interesting market next week. Okay, take care, guys. Bye-bye.